Hello, Ana, ¿cómo estás? How are
Hola,
you?
I'm doing fine. How are you?
Todo bien aquí, un poquito roncando por el fin de semana, pero
¿Tienes té, agua, algo ahí?
sí, ¿qué estás tomando? Estoy tomando, a
Yo
ver,
tengo Chick-fil-A porque andaba on the go y pues rapidito Chick-fil-A.
¿pero qué es? ¿Limonada o qué es?
Ujú.
Ok, yo me estoy tomando el Celsius para la energía, ya saben. Ahí está. Ok,
Ahí
está
está.
bueno.
Ya estamos en febrero. We're already in February. Can you
Ay, no lo
believe
puedo
that?
creer que ya estamos en febrero, ¿vas a creer? Valentine's, a la puerta de la, así, ya, la próxima semana, ¿no? Algo
Sí,
así. Wow,
sí.
no, se pasa el
Wow.
tiempo volando.
Let's
Oye,
wear red next time, red or
ay,
hearts or
es
something.
cierto, sí, 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 así lo hacemos. Qué bueno que me recordaste. Oye, Anita, bueno, ¿cómo va la historia? Bueno, en inglés. Okay,
In
Anna, so
English.
how's everything going with the interest rates? I've received a lot of phone calls from a lot of different clients, customers, people that I know, talking about the interest rates, right? So tell us, what's going on with the interest rates?
The interest rates are going up. Whenever you hear news that the Federal Reserve or somebody's announcing that the rates are going to go up in the future, if they say in the future, that means it's now.
It's
Like
now.
the investors don't wait for the future. The investors start protecting already themselves, so they hike the rates. I read an article yesterday that said that the Federal Reserve was predicting three, I think, interest rates of 0.25 this year. So let's say that right now we're at 3.75, that it would go to 4, and then 4.25, and then 4.5. So three rates of 0.25. But then on the same article, it said that Bank of America was predicting seven, I believe, 7 or 8 rate hikes this
Oh,
year.
wow. So seven, o sea,
That
potential.
means we're gonna be in the high fours, maybe fives at the end of the year. What I tell the customers are, what can you control? We cannot control the economy. We cannot control interest rates. The way that we can control is try to have the best credit that you can when you apply for a house. Save money. Sometimes the more you have saved, whenever we run the model, the system asks us like how much money they have in reserves, what's their credit, how much debt to income they have. A lot of times 15-year loans get a really better interest rate than 30. Shop around also. If as your lender, what's my rate on FHA, what's my rate on conventional. Sometimes FHA is better, sometimes conventional is better. So it's good to check everything. Don't just stick with one. Look for different things. How about 25 years? How about 20 years? How about 15? um, when I always tell my customers, when I bought my one of my first properties, I had a 5.875 interest rate. I didn't think much of it. Everybody was getting the same thing. That was over a decade ago. So if you get an interest rate in the 4.25, it's still very good rates. It's just that we got used to the really, really good ones, but they're still affordable. I hear a lot of parents and grandparents say that when they bought their home, their interest rate was 18%.
Yes.
So we're not gonna get there this year, probably not in the next, hopefully decade.
So
But
let me ask you a
don't
question.
let it deter you from buying a house.
Don't let it disappoint you about the interest rates going up, okay? Because remember, it's the same thing, unfortunately, right? I
Mhm.
mean, the house and the interest rate, they kind of go together. So then what have you noticed? Like, for example, it is predicted that it's gonna go up. So has it gone up already, and how much has it gone up? Like,
It's gone up. It's rare to get a customer, I would say, lower than a 3.5 on a 30-year. Most of them are higher. If the credit score is below 620, then they're probably looking into the middle fours.
okay,
I compare my rates. I go online to I forget the webpage. You just Google like mortgage rates, and this webpage you put, are you purchasing or refinancing? What's your credit score? What's the purchase price? How much is your down payment? And it gives you interest rate. So I always compare my rates to that, and I'm always better.
okay.
So that's a good thing. And when customers sometimes get shocked, they're like, "What do you mean I'm gonna get a 4% or a 3.99? What do you mean they were in the twos?" I tell them they have changed, and I show them the page, and I said, "Look, this is from the website, and sometimes he shows bigger banks, and I'm like, these are the bigger banks, and that's what they're quoting, and I'm better. So, um, but again, don't let it deter you. There's most of the loans don't have a prepayment penalty, so if you want, you can always pay a little bit extra every payment. You're gonna pay faster. You're not gonna pay all that interest. If for whatever reason rates drop in the future, most of the loans you can refinance, they allow you to refinance. So there's always that possibility.
That
Houses will continue to appraise. So in the future, you can always sell it and make some money. So it's still an investment. It's better to buy and it's yours than to be renting and paying rent.
correct. I mean, and then I'm gonna tell you some stories that has been happening with my clients recently, or phone calls that we receive about
Mhm,
what are the questions our buyers and
mhm.
sellers are having, right, in this new 2022 in the market. But we have Priscilla Raisa here. Hi, Priscilla. Thank you for asking the question. Hello, hello. So she says, with higher interest rates, does that cause people not to qualify because of a higher payment?
So what happens when, let's say that I have a customer right now, and they're, or let's say 5 months ago, I have actually have a one girl. 5 months ago, she was qualified, let's say for 150. Now, because the rates are higher, she may not qualify. She's not going to qualify for the 150. Maybe she qualifies for 130. Her purchasing power is going to be less because the rate is higher.
Mhm.
So that's just a thing we have to just account for it. If she wants to qualify for more, then now we're going to start talking about paying off debt. Can you pay off something so you can qualify for a higher amount?
Okay, let me see if I understand, Priscilla. So basically, if the interest rate goes up, right, you do qualify, but you might not qualify for the amount that you would have before the interest rates went up, right? So
Correct.
right now, don't get disappointed or scared. I already saw your little face. She look at the
Oh,
little face.
oh.
Okay, so then let me put the question back just for all of the viewers, right, to see what she's asking. So then, in other words, exactly what Anna said, you will still qualify, but probably not for a higher price home. So let's say with a lower interest rate, you were qualifying for, let's say, 250. So now that the interest rate is higher, you may qualify for what, Anna? 200?
240. 240.
Oh, it's not
Yeah.
that different. Okay,
Yeah.
240. So it's only a $10,000 difference.
Yeah.
Now remember, it is a lot better. I mean, for you to buy that home for 240 instead of 250, instead of continue renting, because you're only paying the investment of someone else.
Mhm.
Remember that. There's nothing that you're keeping. Okay.
And also, sorry to cut in. Go ahead.
Okay, no,
Sorry.
no. And that property will always increase in value.
Mhm.
Okay. So then you are getting profit or equity back.
Yes.
Okay. So
Yes.
yeah, it's always a good investment. Go ahead, Anna.
I was gonna say that you build equity. What does that mean? Let's say that you buy a house right now, and then let's say 5 years from now you want to sell that house because you've been paying down the house, you've been making your payments, and property values continue to increase. Maybe 5 years from now, when you sell it, you make $60,000 profit. That's money that's given to you in a check when you sell. I tell a lot of customers, let's look at your bank account. And I actually go through them and I say, how much are you saving per month? You have $10,000 in the bank, you deposited five, but you spent 47. You're only saving $200 to $300 a month. I'm like, if you don't, where's the money going? They're like, I don't know. I'm just spending it. I'm like, well, when you buy the house, a lot of those things go away because now you're making a house payment. When you sell the house, now you made $60,000 that you would not have saved in those 5 years because
Claro.
a lot of people here in the valley don't save money. So buying a house, it's an investment. It's almost like putting money in a savings account every month. When you sell your house, you're going to take all that savings and get a check. So it is still a very good investment. Real estate is a good investment. The rates are still low. Yes, they're higher than they were, but they're still lower than when I bought my first house.
Oh
So they're
yes.
still low.
When I bought my first home, I think ours was like in the 8%. I think
Mhm.
8, 7. The first home I bought,
Mhm.
And then we bought another one, right? So the interest rate was, I mean, lower. But I
Mhm.
mean, don't wait long. Remember, your money will always increase. I mean, you always have to invest your money in real estate and stop renting to someone else.
Yeah.
Stop.
Another thing that I tell my clients is a lot of times they tell me about the rates. Oh, they're too high or whatever. I'm like, let's look at your truck. I asked this a customer 2 days ago. What payment do you have? What interest rate do you have? Actually, it was last night, and he told me I have a 12%. He says he told me I started the car with $35,000. He's like, I've been paying for all this time, and I owe almost all the 35. Everything that he's paying is almost interest,
Oh
and
my
I'm
God.
like, but he didn't question
Car.
the
You're talking
yes.
about the car, not
I'm
even
like, you didn't question the 12%. He like, that's the only thing I could get with my credit. I'm like, exactly. I'm like, the car, he got it for 7 years. He just refinanced to 5. And I told him, the truck, you're not going to have it for all the 7 years. You're probably going to trade it in later on. Right now, if he tries to trade it in, he's going to have to put 10,000 from his pocket. He's like underwater in the truck. I'm
uh,
like, you didn't question the truck. Yes, you're asking me why you have to pay extra fees for a house, and I'm like, that's because you're of your credit. I'm like, and the house is actually an investment. Look at your credit cards. What interest rate do they have? They have 18%, 30%. The house is gonna be probably later this year in a 4. Is still better than most of the other things that you're paying.
besides the car, you don't live in the car, friends. Okay, I know it's awesome. I know it looks good, and we like to show off our car. But remember, the first thing I want you to do with your money, especially all of our friends of the oil field, all of those people that make a lot of money but no credit yet. Okay, you can still qualify for a home, and your focus should be a home first, not a vehicle, not those nice purses and car. I mean, and shoes that we like, right? We can do that later. But first, buy your home, okay? And another thing I wanted to ask you, Anita, but besides of the higher interest rate, because we've had that question also, income tax. Okay, I have a client who is looking into buying a home this year. So then, sometimes, right, we would like to know if you can tell us. So if we make or we report this amount of money, what is it that I can buy? I had that question, right?
Mhm.
So how would you go about that, right? I mean, with the income tax.
So it depends. Like, I guess if you're W-2 employee, if you work for a company, you get a W-2, I don't even need to see your tax return. I just
Okay.
ask you for pay stubs and W-2s, and that's the income that I use.
Okay.
If you're self-employed, a lot of people that are self-employed call me and say, I'm not ready to put credit. I just want to have a ballpark of how much I'm going to qualify. I need to know if I'm going to wait another year or if I can buy a house now. And in that case, we do scenarios. So basically, what I tell them is, okay, how much did you report a profit last year? So basically, when you're self-employed, you report how much money the company made, what the expenses of the company, and then what's left over after all the expenses are taken out. That's the profit. So I tell them, how much profit did you report? And they tell me $70,000. Okay, I write it down. And then I tell them, what are your monthly debts? And then they tell me, I have a truck for 1,000, I have a credit card for 100, a student loan for $50, and that's it. I don't have any more debt. So then at that point, I can tell them, okay, I do a quick math and I say, based on what you're telling me, you should qualify for, I'm going to make it up, 300,000. Is
Okay.
that sufficient? Is that what you were looking for? And then if they say, no, I really wanted 400, then in that case, I tell them, okay, either you need to pay off the car or we need to wait until you report this year and hopefully the profit is higher so that you can qualify for more. So
I
I
see.
can give them a ballpark. I cannot guarantee it because I'm not running it through the system, but I can give them a ballpark. Now, if they say, let's do it. So then if I put credit and they tell me how much they make, then at that point I can run it through the system and basically I can kind of guarantee it because I can show them the system's giving me approval with this amount.
Okay. Okay. So
I don't know that does that answer the question?
yeah, that answers the question. So then, if you're listening out there, friends, okay, if you want to know, because we have this question is very recurrent, right? Especially right now in these times that we're in tax season. So they're asking me, hey, I'm gonna report, right? I have my own business, I'm self-employed, but I wanna make sure that I do qualify for a house, right? So what is the rate? So then Anna already explained that it all depends, right? She can give you a ball figure park, I mean, more or less, right?
Mhm.
What it is that you can, but you need to have an idea in your mind already. I want a house that is 250 or it is 300. At least you can give us like a baseline. You cannot just tell us, Brad, I mean, just Brad, tell me how much am I gonna buy. Just tell me I want a house of 300,000. So how much am I gonna report on my income tax? Because I'm self-employed or I have my own business. Okay, so then we're gonna be able to guide you through there, right? And Anna's gonna use a system, or she does some math, and she can guarantee you. Because then I had the question of, how do I know if I do qualify? Maybe it was just an
Mhm.
approximate. They go, no, no, no. They're gonna let you know for sure that you qualify for this amount. So then once you do what the lender or the professional tells you to do, then you're gonna be able to get the pre-approval and you're gonna be able to buy your home. Digo, but you have to start now. That's another tip that I want to give you, all of my friends watching After Hours Real Estate, is you have all of these questions and all of these goals to accomplish, right? Or becoming a homeowner. But she was telling me it has been years. They said, because then I talk to my mom, and mom gives me her opinion. Then I talk to a friend that whatever happens when they purchase a home. And then I talk to, so they continue talking to people that are not experts in the field. So I explained to her, you need to stop doing that, because all situations are different according to your financial situation. Not because that happens to your mother or to your friend, it's gonna happen to you. Besides, real estate and lending, they change constantly. So you need to be advised by a professional, someone that does this for a living, full time, specifically, right, with experience. That way they can let you know this is what you can do in order for you to become a homeowner. Because I explained to her, you're like going in circles, right? It's like a hamster inside of a little, whatever
Yeah.
that is called,
Circle. Yeah.
a circle, the wheel.
Wheel. Mhm.
Exactly, because you have all of these does, all of the answers you're getting, they're not wrong. They're wrong, right? Because
They're
they don't.
related to them. They're not related to her.
Exactly. It's not going to happen to you. So I said, look, let's do this. Let's just talk to professionals and let me tell you what it is that you can do. And if you have to wait sometime, it's okay. Wait, right? But you already know what to do in order for 3 months, 6 months to be ready and you can have
Yes.
your home. So if you have those questions, friends, that you're listening to After Hours Real Estate, I know that now you're going to have a lot of questions because the market is becoming more active. You're going to be doing your taxes, right? You're getting ready to buy your home. This is the moment to use our free show because we're giving you information for free. Okay.
Yes.
And we're not asking you need to buy this or you need to, go with Anna. It's just for us to help you. Okay. Of course, we want to consult with you, right? Maybe you can give us the opportunity. But in reality, it's just to educate you. That way you can become a homeowner. So if you have any questions, please let us know. We're here every Monday except today. I know today is Tuesday, but because yesterday I had a closing,
It was in a month. It was crazy.
it was crazy. It was end of month. I was in Brownsville. This beautiful client of mine. I'm so proud of him. He's working for SpaceX. SpaceX. Anita was the one who lent him the money, so he was so happy. So it took me a long time to come back, so I couldn't make it to the show, and that's why I
We
wasn't
got
here.
the lizard in the house.
Yes, yes. The lizard is in the house. He had a lizard. It was going to be fertilize his apartment. So it was really important for him to transfer the lizard, right? I don't know the name, Joe. I don't remember the
Yes.
name of
I'm
the
like,
lizard.
we need to close so the lizard can go.
Yes, it's a Komodo dragon. So I was all excited.
Yes.
And there's two more puppies coming. I know they're not puppies, they're big dogs. I don't know what they are, but they're
Mhm.
coming. He's gonna send some photos. So
Yes.
the point is that I wasn't here yesterday, but usually we're here Monday at 5. So you can always send us a message and ask us any questions that you want. Okay? We're here to help you. Now, a ver, we have Priscilla. Hi, Priscilla. I thought you were gone, but let me see. If someone has a new investment home that just went under lease, can that rental income be used if it is a recent lease that wouldn't be reported until 2023 on taxes?
So if you rented it last year, and we use the tax returns from last year, then we're not gonna see it, right? So we can use a lease to use a rental. If you're gonna use the tax returns from 2021, which you're gonna do in the next 3 months, then make sure you report it, even if it's a zero, but that you report something to show that it was a rental. Now, I can go off and on talking about this topic. FHA, if you plan to buy a house, FHA, they don't let you use rental income unless you report it on the tax return.
Okay.
Conventional will let you use rental income, but you need to have a primary residence or a primary debt that you're paying. And I can explain to you, Priscilla, one on one, like all the details because there's a lot. But yes, you can use the rental lease in most cases to offset the mortgage payment if you have any, or if you have profit, to use it as income. Yes, we can.
Perfect. I hope that answered your question, Priscilla. You have
If
any?
not, message me and I'll tell you more about it because it's a long answer.
Yeah. So let us know. Thank you so much, Priscilla, for asking. And please give us a call if you have any questions. You know where to find us. That way we can give you a one-on-one free consultation. But
Mhm.
yes, those are very good questions, Priscilla. Thank you. I hope
I
that
had,
helped.
I had a customer today. I was just talking to him before this, and he says, "I like this little house." He sent me the house. It's worth 136,000, and he's telling me all the things why the house is not worth 136, even though the house is like $86 a square foot, which
Okay.
is cheap for this time.
Yes, it
And
is.
then he tells me that he has a lot it's paid off. Maybe he should build in that, or maybe he should look for not a starter home but more of a upscale home and get another one. So he doesn't know, and he's going off and on. And I'm like, sir, let's apply. Let's find out where you stand. Let's find out what your budget is. Let's feel what you're comfortable with paying, and then you decide if it's this house, build, buy a bigger house. I'm like, because when you apply, it's not specific to one house. It can be any house in the state of Texas because that's where I'm licensed. I'm like, and the pre-approval moves with you. A lot of people think, oh, because they call and say, I'm wondering about this house. It's not specific to that house. It can be that house, but it could also be another house. So
Okay.
that's something important for buyers to know.
Yes. So then let's say it again. So then if you get pre-approved, right, in the state of Texas, it moves with you. Do you mean in another area in Texas, right? In another city in
Yeah,
Texas?
let's say that they're here and next month they want to go to Houston, they could buy over there.
Over there in Houston, for example.
Or it can be here in Far and then now in Edinburgh.
Exactly. Like for example, my example with our client Alex. Okay, so he used Anna. Anna's in McAllen, right? And he purchased a home in Brownsville, Texas. So as long as the lender has a license in Texas, I mean, you can get pre-approved and buy in San Antonio, Houston, Dallas, whatever it is that you want to buy.
Yeah,
Okay.
or it's not specific to you or to the house. So let's say that you find a house on Main Street, and then all of a sudden you're like, no, that's not the house. Now you can find one on Pecan, you can buy that, or Hackberry. So it's not specific to one house. It's specific to you as a buyer. As long as the house is in good condition, the pre-approval moves with you, and that's important because a lot of buyers are like, well, I don't want to apply because I don't even know if I'm gonna like the house. I don't
Yes,
want to apply because I still haven't found the one. I'm like,
I
but
know.
you need to apply to know where you stand, figure out your budget, make sure that we have everything ready so that when we start the process, it's very smooth. That's the main takeaway, I guess, from this.
Of course, of course. So then, okay, we talk a little bit about income tax. We talk a little bit about interest rates. We answer some questions. We give you a story or a question from clients that we have received recently. Okay, another thing I wanted to talk to you, I mean, because all of this is related to buyers, but in this case, I want to talk to you about a little bit about sellers. Okay, if you're out there, if you're thinking about selling your property now, right, you want to get top dollar for your property, this is the time. I know that we continue saying that, but I mean, we have proven it over and over again. Okay, we're seeing, I mean, I'm saying profit of at least $40,000 to $45,000 that sellers are keeping in their bank, right? I mean, which is this is the time if you don't want this property, if you're gonna upgrade or you're gonna sell this one and buy a bigger one, right? You might keep, right? It depends the situation, depends the home, but I mean, we're looking into $25,000 to $40,000, okay, on equity. I mean, some people even more, but give us a call on that. Now, another question I received from another client that is, I mean, getting ready to sell their home. So he asked me for tips about how do I prepare my home, prep my home, I mean, for the market, right? So he asked me several questions. So one of them is, am I supposed to remodel the kitchen and the bathrooms? An example, right? In order for me to get the most money for my home. The answer is no. Okay. No, you do not need to remodel your home because remember, you're selling the home. You're selling the home. I don't want to say as is because it gets confused, right? But you're selling it as in their condition as of now. Okay, what we want to do is we want to make the property, appealing to the other buyers. So what will we tell you to do? How to prep the home without spending so much money? Basically, the only thing we will tell you is a little bit of paint touch-ups, right? Sometimes you have stains and stuff like that. Paint touch-ups, that will be a good one. Maybe change some light fixtures if you want to. Sometimes it's not even needed. Okay, but the example that he asked me was this. He just bought a home. So now he upgraded, right? So he's selling his starter home now. Okay, so then he got rid of the what is it, the bases of the TVs? The
Mhm.
bases where you have the TVs.
Yeah.
Then you have holes, right? And there's a different color of paint on the walls. So he was asking me, what do I do about that, right? Should I paint the wall? Should I leave it like that? You go, well, if you would have asked me, I would have told you, leave the bracket
TV.
of the TV bracket there. You don't have to
Mhm.
leave the TV, but I'm talking the bracket, right?
Mhm.
Because if you remove the bracket, right, now we have an issue of a hole, different color paint. Now, if we retouch that paint, it's gonna look like a stain. Now we need to, paint the whole, what is it, wall, right?
Yeah.
So then the idea will be leave the brackets behind. They're not that expensive. You can buy them in Walmart for 40, 50, $60. It will be more expensive to cover those holes and paint that wall for every
Yeah.
single room of your home. I think he did it in the TV room area and all bedrooms. So 4 different walls. So one of those tips will be leave those things behind. Now, if you already did that because he had already removed them, well, what did I tell him? Well, paint the wall, right? Because you want to get top dollar for your home. Listen to the little tips that we're going to tell you, right? Don't pretend to enter the market with a hole in the wall, right? Even though that you might say it's no big deal, it is a big deal for buyers. Buyers will not give you top dollar if there's a hole there, okay?
Well, because as a buyer, I'm gonna go to a house and look at holes and say that's very visible, and they didn't take care of it. What else did they not
What
take
else?
care of?
This
So
house is
then,
not pain, right?
yeah, yeah. What other things are there that I'm not seeing as visible as this?
And besides, you want a good impression. That's how we get buyers to pay you top dollar. So then
Mhm.
the house has to be looking good, smelling good. I know that you hear this all the time, but that's what it is, right? So then the example of the paint, try to do that the way you can get a little bit more money, right, from your home. And for buyer to think or to know the house is gonna be well kept. Why? Because buyers spend on inspections, the general inspection, on the thermal inspection, the appraisal. So at least just to get into contract with you, they have to be ready with at least $1,000. So
Yeah.
then if they notice some things into the property, some things that you seller think they're small,
Mhm.
right? For them it's not small. Because if they decide to move, to break the contract during termination option, right? They already lost $1,000. So that's why it's so important, right? For you to retouch what we tell you to do, right? Basically, curb appeal.
Over
The
here.
backyard, the
The
front yard
front
of
door.
your property, right? Just to be clean, get rid of all the telarañas, you know what I mean, spider webs and stuff like that in front of the house. Sometimes we have look those stains from the rain, right, on the brick. It's easily removed with a water pressure. Okay, so then the house will look good and appealing, okay, and very good, very clean, everything in order. So then don't do that. Don't do the wall thing, okay?
I
Please.
would also say like closets or drawers, declutter, because if I'm a buyer and I go and open a closet just to see how it looks and it's very things like very packed, I'm gonna say, oh, my stuff is not gonna fit here.
Exactly, because it gives you the appearance that it's small, and it's not
Uh-huh.
small.
Yeah.
Is there's a lot of things, right?
Mhm.
Okay, so then that will be one of the tips that I will give you. Another tip is, right next to the filters, right, in the AC, usually sometimes you have had, let's say in the past, you had a stain or I don't know, a leak, right? But you already fix it. And I get that a lot from my sellers, but it's
From
already fixed.
appraisers.
Oh, from my person, right? So then my seller says, I already fixed the issue. It happened many years ago, but I just never went back to paint the little, the little yellow
Same.
stain.
Mhm.
right? They go, yes, I understand. They go, but any buyer will not believe us that it was already taken care of, right? So then
Mhm.
if you see a little stain right next to the AC, they're gonna think that you have a major issue with the AC. I mean, with the roof. So then just touch up that paint. That is something that I go through. I mean, that is the most recurrent tip, right? From before hitting the market, right?
I say people like light. A lot of people say when I buy a house, I want it to feel light and not gloomy. So maybe uh,
Yes,
put nice light bulbs. Make sure all of them are working.
yes.
Clean
LED light.
windows. Clean the windows so the light can come in.
Exactly. In the LED lights, you know how we used to have natural light in the past, right?
Mhm.
So just change the bulbs. It's not gonna cost you a lot, and the house is gonna be beautiful lighted, right? So it's gonna give a very good impression to the buyer. So then change those light bulbs for white light. Or what is it called? It's called white, right? The
Yeah,
LED
soft white or something like that.
soft white, whatever, the one that is like very white. Let
Mhm.
me see. Okay, we have Priscilla. One more question. Typically, what is the down payment percent needed for a multi-family property like a fourplex?
If you're gonna live in the property and go FHA, the down payment is 3.5%, just like a house.
Mm-hmm.
If you're gonna buy it as an investment property, then it's 25%. So it's a big difference. So if
Yes.
you're looking into building a portfolio, buy the fourplex first, live in it for 1 year.
Mm-hmm.
After the year, you can move up to a house and
Mm-hmm.
give 5% down for the house. So you save a lot of money by doing that.
Okay, now repeat that one. Let's say you already have a house, right? And you want to buy a multi-family property like a fourplex. That will be 25% down payment?
Yes, if you even if you're gonna go live in it, because you already have a house and you're buying conventional the second time around, then the down payment is 25%.
Mhm.
How can you get around that? They're always gonna ask if you already have a house, why would you want to go live in a fourplex? Like that doesn't make sense. The house is really nice. The fourplex may be smaller, so you need to have a legitimate reason as to why you would do that. The fourplex may be newer than your house, maybe closer to work, or maybe the fourplex is 3 bedroom, your house is two, and you need an extra bedroom. Um, you need to really make the rationale work so that the underwriter can
Would
take the
accept that.
story. Yes. So there have been instances where people already have a house and buy a fourplex and they're legitimate reasons. But that's going to be a question that needs to be answered.
Okay.
So if
Okay,
you
but
can buy it FHA, live in it, 3.5%, 3.5% down payment.
and if not, I mean, Priscilla, I mean, 25% down payment. I mean, just think about it. They're going to lend you less money, right? So you're going to finish paying it quicker. I mean, it's not that bad. Don't get scared,
Mhm.
right? If you happen to go through a conversional, I mean, with 25% down payment. Remember, all of these are investments. They just keep growing. So then it's not like you're throwing your money away. I mean, if you have the 25% down payment, do it. And I mean, and try to avoid, because it's going to be uncomfortable, right? I mean, if you live in a house and then go live in an apartment, I mean, I'm not sure. I mean, if for some people that trade-off will be good, but if you don't have to, I mean, just put some more money, right? You're going to finish paying it quicker. I mean, if you can. Okay.
Yes. Mhm.
I hope that answered your question, Priscilla, and thank you for keep asking questions. Thank you. We have Marisol here. Great information. Hi, Marisol. Hi, nice seeing you. Thank you for
The
watching
birthday girl.
the birthday girl. I know, beautiful. Okay, Anita. So thank you so much for being with us. We're ready
Thanks,
to.
sweeties.
No, thank you. And Facebook friends, if you're watching After Hours Real Estate, please know that we're gonna be here every Monday at 5. And if not, you're gonna see us on Tuesday, but we're gonna try to keep to the schedule and ask us any questions that you might have. Get ready, right? Well, because we're coming. This is free consultation. Anything that you need, either lending or real estate, let us know. Okay.
Don't let anybody deter you. Don't find excuses as to why you haven't bought a house. The only person that's stopping you from buying a house is you. Ask us, use us like Edie says, get the information you need, the answers you need, and let's get you into a house this year.
A ver, are multifamily properties closing take longer to close than a regular SFH? What is
No,
an
it's the
SFH?
same. It's the same. I have a post coming up of a client that I just I closed a fourplex investment, and we got clear to close in 16 days.
Awesome.
Mhm.
Awesome. So great. Okay, now we have Diana. You ladies are awesome. Great information. Thank you, Diana. Nice seeing you.
Hola,
Thank you,
Ana.
beautiful. Okay, we have Priscilla. Thank you, Priscilla. We're here to help anything that we can. Okay, talk to you soon,
Thank you,
everybody.
ladies. Bye bye.
Bye.